I'm Kayla Parker with Reliance Mortgage, and I am making a video series to simply educate consumers on the mortgage process and how to buy a home. Knowing how to buy a home and having confidence in moving forward with that decision is something I'm incredibly passionate about. I do not believe that wealth is built by accident, and I do believe that real estate has created more millionaires than any other wealth producing tool out there. And it's something that is emotional. It is part of the American dream. And I know that I love being in my home, knowing that no one can tell me what color to paint the walls or that I have to be out next month because they've decided to sell. So if I can help you be more confident in just understanding your finances and how you can make this a reality for you and your family, then I've done my job. I am a loan officer with Reliance Mortgage. I am based out of the Pensacola area, but I can serve the entire state of Florida or Alabama. I have given many referrals out of the state of Alabama and Florida because I am connected to all 50 states through CMG Home Loans. So don't worry if you're catching this and you need a referral to another state, you can always contact me with your questions. I'm happy to help. That being said, I would love to help you if you do need a mortgage in the state of Florida or Alabama. But let's just talk about what is the mortgage process and how to become a homeowner. And let's take it from the top. This is our guide to home ownership flyer. This is something that I could email to you if you would like it, but I'm just going to use it as my guide to walk you through the home ownership process and keep it as simple as possible because I could talk for hours about this topic. So if you reach out to a realtor first, because most of my clients do, they're going to tell you, hey, do you have a pre-approval? And you might say, what is a pre-approval? A pre-approval is a piece of paper that says you have completed a mortgage application. And based on all of our due diligence up until that point, we do believe that you can qualify for a home and we're going to give you a budget. Now, that is something you can get from me, a loan officer. And you could also get from a bank. Banks have loan officers on their payroll. I have other videos talking about the differences between loan officers, lenders, brokers, etc. But for all intents and purposes, we all do the same thing. We as loan officers, whether we work for a bank or a local lender or we're a broker, we are able to sell you a loan. I am not giving you the money, but I am representing the entity that is giving you the money to purchase this home with a mortgage. Now, this money cannot be used to buy a car, cannot be used to buy a boat, cannot be used to buy a business. That's why it's a mortgage is for residential purchases. It is a loan for you to buy a home. So let's talk more about that pre-approval and how you get it. You get it by completing the mortgage application. Now, the mortgage application is detailed, but it's also very basic. It is your personal information. Trust me, I, as the loan officer, do not want to be digging around in your bank statements and things like that. What I am looking at is just your general overview. So I'm looking at how long have you been at your current employment? Do you have dependents? Because sometimes if you're getting, say, down payment assistance, the size of your family can impact how much of that assistance you can use, etc. So there's little pieces of the application that you might feel are very intrusive or like, why does it matter how many dependents I have when it comes to qualifying for a mortgage? But trust me, every question that is asked has a purpose, and it is very important that you take the mortgage application very seriously so I can ensure that I can provide you all of your options for a mortgage, because you may be someone who can qualify for government loans such as the FHA or VA or USDA, and you might also qualify for conventional. I won't know these things if we don't fill out the mortgage application correctly. Also, the big thing to note that a lot of people hesitate even completing the mortgage application is because you're afraid of a hard credit pull. Now, this is a technique that some loan officers or banks or lenders may use to try to scare you into only working with them. And I'm here to tell you that a soft check gives us all the information that we need on the back end to qualify you and get you that pre-approval so you can look at homes. We do not need to do a hard pull. And I can promise you when you work with me that if I need to do a hard pull, I will call you and tell you exactly why I feel we need to do a hard pull in order to move forward. But 9 times out of 10, I'm able to use a soft check to get everything I need to issue the pre-approval. But I do believe that this is something that stops people from moving forward. So we've gone through the application, we filled out our demographic data, our income data, our assets data, and all of that other detailed information. I'm going to look at it and I'm going to send you a doc request. Now, the doc request is I am looking for proof of your income. And maybe you have some additional income factors that I need to consider. So I'll be asking for those documentation pieces as well. And then your bank accounts to verify your assets. Once I have those things and I cross-check my guidelines, so every mortgage has a guideline, and it's simply just, think of it as like if it said, okay, the bank has essentially said, I will give your borrower money as long as they have at least this credit score, at least this debt to income ratio, at least this, at least that. And if you meet all those check boxes, I'm saying, hey, based on everything that they provided me, I do believe that they qualify for this loan. Here you go, borrower and realtor. Here is their pre-approval letter. Now you can go and look at homes. And so that is your first step to getting into the door at looking at homes. And some people start this process and they get a pre-approval letter and they don't find a home for a couple of months. That is totally normal and okay. The goal of the pre-approval is not to push you along and so you buy a house tomorrow. But what often happens is that people do not do the pre-approval early enough to ask all the right questions to ensure that the home that you find is affordable and that you can negotiate the best offer. I spend a lot of my time working with borrowers and realtors to negotiate the best offer with the seller based on my borrower's goals. Do you not have a lot of cash on hand? Meaning you want to buy a home, but you're a little short on funds. I can help negotiate an offer to get you in for under $1,000. Sometimes I've even had clients get a check back at the closing table. So it's important that you start this process early. Now, I do recommend having at least $2,000 saved prior to jumping into the home buying experience. That being said, I have helped people with less. So the earlier you start this process, the more education you can get and the more I can help you ensure that we find the home that meets your needs. When I talk about needs, payment is a big one. One of the things that I often do is ask people, hey, what is your target monthly payment? And I saw something recently that said, that sounds like a used car salesman. Well, I'm sorry, I can't disagree with you more. You should know how much your mortgage payment needs to be in order for you to live the life you want to live. Because that's your biggest, for nine times out of 10, that is your biggest monthly payment. And everything else trickles down from that, whether it be a car payment, your utility payment, your daycare, etc. We need to make sure that you're not going to lose your home. And so this payment needs to be something that you're extremely comfortable with paying, that you could see yourself paying for 30 years because that's what you're signing up to do. And so I will help you get to that number if you don't have one, based on what I see your debts are and how much you make. I can help you strategically think about, what does my payment need to be and what does that mean in terms of a home I can afford? The thing about your payment is there are 4 components: principal, interest, taxes, and insurance. And insurance can be made up of 2 things: your homeowner's insurance and your private mortgage insurance. Your principal balance is the amount you pay per month to actually pay down the home. So if we buy a home for $300,000 and we have a loan for 30 years, based on whatever interest rate you get, there will be what's called an amortization schedule, and it will go over the length of the loan, so 30 years. And every single payment, there's 360 payments in 30 years, will have an amount that goes to principal and an amount that goes to interest. The interest goes to the entity that you borrowed the money from. So that's gone. It's It's kind of like rent. If you're paying rent, it's just gone. It disappears. That's the interest. Now, the principal is like a savings account. This becomes your equity in the home. And every month you pay towards the principal, which is the part that you own in the home. Now, our other components, taxes and insurance. Taxes, every property appraiser site in the county that you're purchasing in has a tax estimator. So what we do is we will go to that property appraiser site. We will type in the address of a home in a similar price range that you're looking for if you haven't located one yet. And we will look at what it's for sale for. We will take that and we'll take 85% of that amount to project what your taxes might be if you were to purchase that home. Then we divide that by 12, and that is your monthly amount that you will pay into an escrow account to pay your taxes. The escrow account is simply an account that is set up to build money. So we're essentially setting aside money to pay our taxes and insurance bill once a year. And our mortgage company will pay those bills out of your escrow account. Then we have the homeowner's insurance. If you have a mortgage, homeowner's insurance is required. There's no ifs, ands, or buts about that. You must have homeowner's insurance. And if you don't keep homeowner's insurance, one will be assigned for you, more expensive than the one that you could choose on your own. So homeowner's insurance is something that you can shop around as much as you want. And this is something that we will, again, get the premium. So the annual premium will be divided by 12, and then you will pay that amount into the escrow account every month as part of that mortgage payment to save up for that next annual bill. So the things that are set in stone at the time that your loan starts are principal and interest. They never change. Your taxes and insurance, though, can change. And oftentimes that freaks people out their first year, 2 years owning a home, is that those things are never the same. And so your mortgage payment 1 year might jump up, and then 1 year might come down because you started putting too much in escrow, and then you got a new insurance quote and it lowered. And so the next year your mortgage payment went down. So it's not always going up, even though it seems like that. You can get additional insurance quotes, more carriers move into the market. We see this all the time. Or you get a new roof or new windows and your insurance goes down. Well, your mortgage payment will reflect that after the escrow analysis. Now, private mortgage insurance. This is something that is calculated based on the loan type that you get and your credit score and how much you're putting down on the home. So for an FHA loan, this is something that is predetermined for you. It's set in the amortization schedule, and it is not something that will ever go away unless you refinance into a conventional loan. Now, the conventional loan does have PMI if you did not put down 20%. It is predetermined when that PMI will fall off. Let's say you put down 5%, which is the minimum for a conventional loan, 3% if you're a first-time home buyer. Then that 80% mark is right around year 11, year 12. That PMI will automatically drop off. If your home goes up in value, let's say in 7 years, you feel that you have at least 20% equity in the home, meaning how much the home is worth versus what you owe. There's 20% in there and you owe less than 80% of that top number. You can request an appraisal. This appraisal will be used to determine if you need to continue paying private mortgage insurance or not. I recently had my own private mortgage insurance dropped from one of my mortgages. The appraisal cost me $190. I want to say my private mortgage insurance was $93 a month. So I made up that difference very quickly once it dropped off of my mortgage payment. So those are the components of your mortgage payment. And it is important when you're getting estimates from somebody and you're setting a budget that they keep in mind all of those costs. Oh, another big one in Florida specifically, but this could be really anywhere in the country, flood insurance. We can easily look up if the home or the area you're looking in has a lot of homes in a flood zone. And then we can also add in the cost for flood insurance to ensure that you can afford that monthly payment. Now, I know I talked a lot about monthly payment. I'm going to do another video about how you can use a calculator and put all of those elements in to determine your affordability. So you got the pre-approval. That is awesome. Go look at homes with your realtor. We can talk strategy, the three of us, to get your home negotiated. Once you are under contract, we're going to begin the loan processing process. That includes, on our team, we have an assistant and a loan processor, and then an underwriter. You will never talk to the underwriter. That is, it's very normal for you not to talk to the underwriter, but they're the one who's truly giving you the approval on your loan. And it's our job, our processor's job, our assistant's job, and our job as the loan officer to package you into like a present with a bow and present it to the underwriter and say, hey, we do believe that you should lend money to these great people so they can own this home. And they say yes or no. Most of the time, what we're doing, because we do so much due diligence on the front end, we're getting yeses. It's just a matter of paperwork. So we process all of that paperwork. We review all those documents. We work with the title company and your realtors to get you to the closing table where you will sign off on all of the paperwork, understand all the terms that you're signing up for, and you get the keys to your home. Now, what most people don't know is that your first payment is often not the very next first of the month, but the month after. So today I'm recording this video on August 11th. If you were to close today, Tuesday, August 11th, your first mortgage payment would not be due until October 1st. There are sometimes, like let's say we closed on August 1st, there would be enough time and you would have your first payment September 1st, but pretty much any time after, say, the 4th, 5th of the month, pretty much guaranteed you're going to miss that next payment, and your actual mortgage payment won't be due until the first of the following month. This is key for those that are renting and their lease is ending, but they want time to move into that home and not double pay. This is key to know so you can set up the timing of your purchase with your rental lease ending, and we can ensure that you don't double pay rent and mortgage together. Let's talk about the tips and tricks. So why is saving essential? Well, here's the thing. You must have a down payment for almost all programs. Now, our veterans do not, our VA, so military, they technically do not have to have a down payment. VA does allow 0%. So does USDA. Now, let's say you're like, well, I really don't have 3% of 300,000, or I don't have 5% of 300,000, whatever the down payment requirement is for the program that you're using. Well, what we have is down payment assistance programs that can help you get into that home and can pay your down payment. You can also get a gift from people that are close to you. Where you cannot get your down payment is from the seller. We can ask the seller for closing costs and prepaids, money to go towards that. Prepaids would be like your first year of insurance, taxes, and maybe a rate buy down, but they cannot contribute to your down payment. So we must use one of these other sources for your down payment. But what I will say, and the reason why I do believe you should have at least up to $2,000 saved minimum to get started, is that most sellers want to collect an earnest money deposit. An earnest money deposit is essentially a deposit you're making on the home that tells the seller, hey, seriously, I really want to buy your home. And so that gives them the confidence they need to take down their home off the market. Why would they leave it? Why would they want to take it off the market if you don't even have any money down and you can just walk away free and clear, but you've tied up their home? So putting this money down, oftentimes minimum $500 to $1,000, but most of the time 1% of the purchase price is what they're going to want to see to take their home off the market. So you need money for that. And the other thing that you need money up front for is your inspections. Now, here's the deal. Technically, home inspections are not required. It is basically buyer beware. But what I can tell you is for older homes without an updated 4-point or WINMIT, your insurance costs could be astronomical. And we really need those things updated, and it would not be beneficial to you not to have an inspection so you can see behind the walls of the home and know what's going on. If you are in a low cash position, this is at very least what you need. Oops. Because if you are in a low cash position and you don't know what's hiding behind the walls per se of this home, well, when you actually own the home, you may not have the cash to fix those things, which could be very much needed. So this is something to highly consider saving for, and it's only a couple $100s to get a home inspection. Now, the appraisal depends on the size of the property, but for most of our starter homes are going to be right around $625, maybe even as low as $550. And so these are things that we need to have money saved for. Now, another big one, bank statements. Okay, this is proving that the money is coming from you. One second. Your bank statements give a clear picture of your risk. It's making sure that you're getting your direct deposit in the amount that you say you're getting. It is making sure there's no large deposits. So like say somebody's giving you money to get you in the house, but then you owe them. We don't want any of that going on. So there's a lot of things that we look for, but the biggest thing I can say is make sure your bank statements stay consistent and that you're not using, say, your overdraft protection too much. We want to see that you're responsible with your money. And honestly, just keeping a balance is a great way to do that. So we need to be able to prove you are who you say you are. Make sure that you, we do loans for non-US citizens all the time. And so that's totally okay. Just make sure you have your paperwork. And like we were talking about the bank statements, this says avoid moving money around. The cleaner your file is, it just makes the process easier. If we see that you only said you bank at bank 123, but you're constantly getting deposits or moving money elsewhere, we're going to say, where's all this money going? Oh, well, it goes to bank XYZ. Okay, well, now we need the bank statements for XYZ. And we're trying to track everything to make sure that the financial picture you presented in the application matches how money moves in your bank account. And we're specifically looking at the last 2 months prior to you going under contract. So let's say we go under contract today in the middle of August, we'd be looking at July and June. And so you could do that no matter where, whatever month you're in. October, it would be September and August. January, it'd be December and November. You get the gist. So here's the deal. My job is to make homeownership simple, is to explain the process, explain the why behind it. Maybe I skipped over something that you wanted me to spend a little more time on. Shoot me a message, leave a comment. Maybe you felt I could have explained something better or deeper. Hey, let me know. I can always create more videos and break something down and make it more simple for you. Here's the thing, homeownership really doesn't have to be that challenging. I want to help you build wealth. I want you to create that savings account that I talked about, that principal that goes to that savings account. I don't want you to throw any more money away on rent. I'm not saying every single person should buy right now. It's all about your goals and your timing, but it all starts with education and figuring out what we need to know when we're ready. And so I hope this video helped answer some of those questions for you. We will keep building on this. Would love to hear from you what you would like to see next.